Hi everyone, welcome to another video on IFRS 16 leases. Like I said in my previous video, the content that I originally wanted to cover was what is a lease under IFRS 16, what is not a lease, and those leases that may or may not be considered a lease under IFRS 16. But when I started preparing the deck, the content was way too much. And so I will be splitting it into three videos. The first video is has already been posted. It is on identified asset. The second video is this one. Over here, what I will be focusing on are short-term leases, low-value leases, as well as leases that are outside the scope of IFRS 16. This will be a really short video as it is merely a continuation of the earlier one. Now let's go into the topic of short-term leases and low-value leases. Now these are leases where the lessee can decide whether or not to apply IFRS 16. First is a short-term lease, as the name suggests, where the lease term is very short. So it is a lease where the lease term is less than 12 months. Now, the only point to note here is that the date of start of lease will be the date of commencement and not the date of inception. Now, let us say the contract allows an option to extend the contract at the end of the lease. Now, if the lessee feels that he will take up this option and extend it, in that case, he cannot consider this lease a short-term lease. Now, there's another option. There could be an option to purchase the asset, which means once the lease ends, the lessee may be able to actually purchase the asset. Now, in this case, the lessee cannot classify this lease as a short-term lease, irrespective of whether he intends to buy or not. If there is an option to purchase, it is not a short-term lease. The final point relating to short-term lease is that this decision that the lessee makes on whether to apply IFRS 16 or not, it is not taken for a specific asset. It is taken at the level of a class of underlying assets. What do we mean by an asset class? It means all the assets that are similar in nature and use. For example, this class of office equipment, which consists of desktops, printers, scanners, laptops, etc. So, in this case, the lessee cannot decide that he will not apply IFRS 16 for short-term lease of scanner, but he will apply IFRS 16 for the short-term lease of a printer. No. The decision that he makes on whether to apply the standard or not will apply to the entire office equipment class. Now we go to low value leases. Again, as the name suggests, a low value lease is a lease where the value of the underlying asset is very low. Standard does not prescribe what is the value that will be considered. It is left to the discretion of the lessee. An important point though is when, as on when will you calculate this value? Do you think it's on the start date of the lease or the end date of the lease? So most of us would say the start date of the lease to see if it is low or not. But no, neither of these dates. It is the date when the asset is created or the date when the asset is brand new. So irrespective of, you may have a 15-year-old printer on your hands, but the value that you will consider is the value as on the date that it was created to judge whether it is low value or not. I'm not talking about recording the value at which the asset will be recorded in the books of accounts. No, this is to just decide whether this is a low value asset or not. Now, the second important point is that this decision on whether to apply IFRS 16 or not is to be taken lease by lease. So, if you have, or asset by asset. So, if you have a lease that is entered into for this a scanner, a printer, and a laptop, in this case, you can decide that I will apply IFRS 16 to the low valued scanner, but I will not apply IFRS 16 to the low valued laptop. So, in that sense, it is different from the decision on short term leases. There are a few characteristics that an asset should have to be classified as a low value asset. One, of course, the value should be low. The second is that the lessee should benefit from the use of this asset. Third, the lessee should be able to use this asset independently or with other assets that are easily available to him. For example, a printer. Now, a printer really cannot be used independently, but if you have a laptop that is readily available to you, you can connect it to the printer and then use the printer. So, then in that sense, the printer does qualify. The third one is that the asset should not be highly related or dependent on other assets. For example, the tires of a car. You cannot say that the tires are low value asset, but the rest of the car is high value. No, because you cannot use those tires independently without the car. And finally, the lessee should not sublease this asset. Not only, that he should not even plan to sublease the asset. If he plans to sublease an asset that is low value, he needs to apply IFRS 16. Now, so these were the characteristics relating to the asset. Now, there are some other characteristics that do not matter in determining whether an asset is low value or not. The first one is how important this asset is to the lessee. For example, a stockbroker. For a stockbroker, his entire work will just be on one laptop. But you cannot say, oh, this laptop is so important to you. So, how can you classify it as a low value asset? No, it doesn't matter. It doesn't matter how important this asset is to your business for, for this decision regarding low value. The second one, the size or nature of your business also does not matter in this decision. And finally, your circumstances, whether the lessee is rich, whether the lessee is poor, a company, a sole proprietorship, listed, unlisted, nothing. None of that matters. Right? So, short term leases and low value leases, the lessee can decide whether to apply IFRS 16 or not. If he decides not to apply IFRS 16, then all the lease payments should be expensed out in the profit and loss account. The lessee can use straight line method or any other systematic method to expense these out. But if there is any modification in the lease or any change in the lease term, the lessee needs to consider it as a new lease and reassess whether the conditions of short term and low value apply or not. Right? So, we are at the end of this topic as well. We go on to the final topic and the super short topic, that is leases that are outside the scope of IFRS 16. Now, to be honest, I will not be explaining these leases because they are under the scope of other IFRSs. So, when I make videos on the other IFRSs, I will of course cover these leases. What I'll do here is just list out those leases, but I will give reference to the related IFRS and IND AS under whose scope these leases fall. So, the first one are non renewable resources. These are assets that are used in the exploration or use of non renewable resources like minerals, oils, natural gas, etc. The second one are biological assets. These are assets like livestock or plants that are related to agricultural activity. The third one are service concession agreements. For example, the agreement by a private company to collect the toll on a road that it has constructed for a government. Fourth one, intellectual property. So, this would be licenses to software, technology, etc. And finally, I'm going to read this out: motion picture films, video recording, plays, manuscripts, patents, and copyrights. So, these are the leases that are under the scope of other standards and excluded from the scope of IFRS 16. So, that brings me to the end of all the topics that I want to cover. I want to do a quick recap of all of it, all of this that we have covered. If you as a lessee need to assess whether IFRS 16 is applicable or not, first thing you check is the lease out of the scope of IFRS 16? If yes, then you do not apply IFRS 16. If no, you check if it is a short term or a low value lease. If yes, then you decide whether you want to apply IFRS 16 or not. If you don't want to apply IFRS 16, don't apply it. But if you do want to apply IFRS 16, or if it is not a short-term or a low-value lease, in this case, you check if the asset has a distinct identity. If no, do not apply IFRS 16. If it does have a distinct identity, you check if the asset is clearly stated in the contract. If no, do not apply IFRS 16. If yes, you check if the supplier has substantive substitution rights. If yes, you do not apply IFRS 16, and if no, you have an identified asset on your hands. And then we move on to the criteria to check whether you have the right to control the use of the asset. Right? That will be another video. So thank you very much for watching this video. I really appreciate all your comments on my previous video. Wish you all a very happy new year in advance. Hope 2022 will be kinder to us than 2021. Bye.